Hi everybody, Natasha Koch here with the Van City Home Team and this monthly market update. You'll hear from Jessie after this with her mortgage update, but let's talk about the numbers. So Greater Vancouver, super busy month. Month of August was actually insanely busy. Typically August is slower for us. Last year the amount of sales in August were 2,231. 2020 has brought us 3,047 sales. So we're up 36.6% from this time last year. So quite a spike. I think that the summer and the spring, everything was combined, and we definitely had a busy month of August. So let's talk about active listings, and I will explain to you why we're going to talk about active listings in a moment. Active listings in the detached sector, there's 4,614. There were 1,095 sales of detached homes. The average sale price in Greater Vancouver is $1,491,300, and the average days on the market is 38. Townhomes, active townhome listings, 2,036. Sales were 620. And the average price for a townhome in the Greater Vancouver area, keeping in mind that includes Metro Van, is $806,400, 34 days on the market, so pretty fast on the market. Condo, active listings, 6,153, 1,332 of those have sold. This is just for August. And the average price point for the condos are $685,800, 32 days on the market. The reason I want to share this is because obviously we're having a pretty hot market. Some of the factors that determine that obviously are the low interest rates right now. Well, actually, I'll let Jessie tell you what's happening in mortgage land. And obviously also the limited supply. So it's all based, as I've said a million times, supply and demand. So let's talk about the sale to active ratio. So this is the ratio that is super, super important, and it took me a long time to determine actually how to look at these ratios. So I'm going to explain to you again how they work. So detached homes, 23.7% list to sale ratio or active to sale ratio. Townhomes, 30.5%. and condos 21.6%. So when you look at this, anything that is above 20% is deemed to be a seller's market, not the other way around. So sometimes people think that the higher it is, it's a buyer's market. It's actually a seller's market. If it was below 20, it would become a buyer's market. So when you look at this, detached home 23.7%, townhomes 30.5%, and condos 21.6%, you'll see that it is a buyer's market in all three categories, but mostly the highest buyer activity is in the townhouse sector. So now this is just Greater Vancouver and Metro Vancouver, and that's combined. Now, if you really want to get clear on whether or not it's a buyer-seller's market, you really have to pinpoint the area. And this is where a real estate agent can help you or our team can help you. All you have to do is direct message me or send me an email at natasha@vancityhometeam.com. I'm happy to put together an analysis of whether or not the area that you're interested in or that you already live in and are thinking about selling is, in fact, a buyer's market or a seller's market. And how we determine that, I'm going to tell you, there's actually 6 things that determine whether or not it's a buyer-seller market. Inventory, so how many listings are currently on the market. And that's local. So local to your area of Burnaby, we can separate it right down to the specific area in Burnaby, for example, that it is. Number 2, price reductions. How many price reductions have there been within the last couple of months? That is a big factor. Number 3, comparables, meaning how many properties are active and how many properties have sold and what they sold for in comparison to your listing. Number 4, length of time that they've been on the market. I just told you that on average, detached homes 38 days, townhomes 34 days, condos 32 days. How many days on the market is your particular house on average taking to sell. Number 5, follow the trends. Obviously, there are trends on the type of homes that are selling or the most popular. Right now, the Fraser Valley, which I'm not doing the stats for at the moment, but if you do are interested in the Fraser Valley, I can do the exact same thing for you. The Fraser Valley is going crazy because a lot of people are moving out of the area and wanting something more rural. So that's definitely a trend, led by this pandemic, I would imagine, or partially to do with it, but a trend nonetheless. Number 6, and this is a big one, and it always happens, is the interest rates. So the variable rate is very low right now, so you can definitely get into a more affordable situation, probably even more affordable than rent in some cases. So the real question is, should you sell now? The answer is really up to you. I wrote down some pros and cons. I'm going to share those with you, and then we'll jump into the mortgage update with Jesse. But in a seller's market, here's 2 pros. Number 1, your house is going to sell super fast, so you are going to move quick. So if you want to move quick and you want to sell it quickly, seller's market is your time. Number 2, actually I have 3 in this category. Number 2 is that you have supreme negotiating power. So in a seller's market, you kind of have the upper hand. You get to negotiate the terms, the timeline, the price, pretty much everything because it's a seller's market. Number 3, bidding wars happen. You've probably heard about multiple offer situations. That happens much more frequently in a seller's market, especially if your property is priced well. Now, there are cons, and you would think, well, it's a seller's market. How could there be cons to selling in a seller's market? There are. So number 1 con in a seller's market is that your listing or your home can become stale very, very quickly. Stale meaning if you don't price it correctly and you don't choose the right agent to market it effectively so that people know about it, if it stays on the market more than the average days on the market, it will become stale. People will wonder what's wrong with it. So that brings us into number 2, less leeway. Let's say that you get a deal on it right away and for some reason that deal falls apart. It's really hard to get another deal because now you've lost all of that time waiting for that deal to come to fruition, and it doesn't. So really hard to get another deal on the table. Those are definite cons to selling in a seller's market. How you can avoid that, obviously, number 1 is to make sure that you choose an agent that is going to market your property effectively and not bring a deal to the table that will fall apart, and make sure that they advise you correctly on your pricing so that you don't price it at a price that might not be saleable. Buyer's market, pros to selling in a buyer's market, because we will always fluctuate between buyer and seller market. Number 1, you get time to prepare to move, which is great. Time to do anything and prepare for anything is always a bonus. Number 2, you're competing against foreclosures and people that really need to sell, so they may not be presenting their property as well as you will, so you can really make sure that you fine-tune, stage it, and you will be competing against them, so you're likely to be the winning candidate if you price it correctly. Cons, tons of competition, lots of inventory. When there is lots of inventory, there's lots to choose from. Buyers take longer to make the decision. And that's the second con, actually, is that they take longer to make the decision, so slower selling process. So I hope that you found this market update interesting. I don't always want to go through only numbers. I want to give you some tips on how to read the stats, what's beneficial for you, and when the best time is to either buy or sell a home. If you have any questions at all, please reach out to us. You can direct message me here or email me anytime at natasha@vancityhometeam.com. So let's listen to Jesse now for the mortgage update, and I hope everybody has an amazing rest of your week. Okay, bye-bye.
Jesse Lavoie here with Dominion Lending Centers for your mortgage and market update. So we have a lot to unpack today, and first and foremost, I just want to send all my love out to all the parents who are sending their kids back to school, all the teachers. This week feels like a really big week because it's the end of summer, kids are going back to school, COVID-19 cases are rising, so there remains a lot of uncertainty for the coming months. But We will get through it. We always do. So anyways, let's dive into it. So the Bank of Canada has committed to keeping the overnight target rate, the benchmark rate, at 0.25%. So how does this impact you? They've committed to keeping it right through the COVID-19 recovery for the foreseeable future. So how does this impact you? If you have a variable rate, do not expect your variable rate to move anytime soon. Financial forecasts are anticipating they may not increase it until early 2022. So that means you have more than a full year of your variable rate payment remaining the same. Of course, prime rate is directly impacted by the benchmark rate. So as long as benchmark doesn't move, it's very, very unlikely that prime rate will move. Secondly, they have also committed to keeping the bond buying program right through, again, until the COVID-19 recovery. I don't know if you guys remember, but back when this all began, Bank of Canada agreed to buy up bonds and other assets to stabilize the bank's balance sheets, a process known as quantitative easing. Right now, they're buying nearly $5 billion a week, and they have no plans on stopping anytime soon. So this is really assisting with the economy. And back in July, based on financial forecasts, we are doing much better than anticipated. Unfortunately, oil prices still remain very low, which is of course slowing things down for us. But based on the job market and GDP, we are climbing as expected, although very slowly. Secondly, mortgage deferrals. So OSFI made an announcement on August 31st. As most of you know, back on March 27th, the regulator came out and released a program that allowed mortgage deferrals to be considered performing mortgages. So what does that mean? There is a performing and there is a non-performing mortgage. A performing mortgage essentially means it is on time, there is no late payments. A non-performing mortgage means it is late. There is late payments that will directly impact your credit and be noted on your credit bureau. So they released on March 27th that they will allow for deferrals for up to 6 months, and they can be considered performing loans. So that means you should not be negatively impacted by those deferrals. It was to give Canadians some assistance throughout this pandemic with such a huge amount of job loss. Now, that has since changed. Any requests made after October 1st will now go back to OSFI's old rules. So what does that mean? That means you will be asked questions. You will have to provide paperwork. I'm sure for many of you Canadians who called and made those deferrals, it's very likely that you called, you said you wanted a deferral, they gave you a 6-month deferral. It was essentially no questions asked to really assist with Canadians moving forward. Now, that will change as of October 1st. You will have to provide documentation. They will ask questions. They will want to be sure that you really do need that payment relief. The other big thing to keep in mind is your deferrals will now be considered non-performing loans. So what's really important is if you do need deferrals, reach out to your mortgage broker, reach out to your bank, reach out to myself, and let's find a solution to help you get through these next couple months as unscathed as possible. So we want to put a plan in place to get you through this without negatively impacting your credit. So that it's really important just to keep the communication open. And then I also really want to encourage everyone right now, interest rates are so low. If you are struggling with debt, unfortunately the amount of debt in the average household has gone up substantially over the last 6 months because, again, the huge amount of job loss. If you have debt, credit card debt, line of credit debt, now is the time to consolidate. Interest rates are so low. If you have a credit card that's sitting above 20%, 18%, 19%, let's roll that into your mortgage with interest rates sitting well below 3%, sometimes below 2%. Not only that, not only will it save you thousands, but we can do many things to ensure that those payments are comfortable for you. So we can put a complete plan in place to ensure that moving forward, you're not only saving thousands on interest, but you are comfortable financially. As always, if you have any questions, please feel free to reach out to me. I hope you all have a really great day.